Hi, it's Chris Titley here. As part of the Sub 11 Uncovered podcast series, I'm joined by Steven Furman, founder and CEO of PayTime. Steven, thanks so much for being part of this series.
Hi, Chris. Thanks for having me. Great to be here.
Now, let's talk PayTime, how the business began, and a little bit about yourself and how you came to this realization to start a business.
Yeah, thanks, Chris. So a bit of background on myself. I'm originally actually an optometrist back in South Africa many years ago. Before I immigrated, I then did my MBA and moved into finance and private equity. How did PayTime start? Well, I actually saw in a number of our investee companies that many of their frontline workers actually now live paycheck to paycheck. So when an unexpected expense occurs, they generally land up short on money before payday. And many would then land up calling in sick due to stresses, and of course land up with astronomical expenses by taking out payday loans. So on the back of this, I thought there must be a better way to help people. What can we do to assist? And therefore, came up with a concept of being able to offer people access to their earned pay without actually being forced to wait for that set payday. And not going into a loan or debt, as one would call it. Incorporated with that, just giving people access to one's money doesn't necessarily give people the silver bullet. It's about helping people manage their money better. How do they budget and how do they save? So that's really the nexus of it. And maybe I'll give you an example of what actually happened firsthand in one of the businesses. We used to own a large manufacturing facility down in Melbourne, and there was a particular worker there that sadly got himself into a bad situation. He took out a loan the one day because his car didn't start. He thought he was doing the right thing by actually getting the car fixed and coming to work. But unfortunately, after a number of weeks, he was just going further and further back with these astronomical interest charges and fees. So much so that it actually started affecting his work, coming to work, completing his job. And then eventually he'll end up going to the manager and saying, look, I'm really in a tough position. And at that point in time, the manager came to us and said, talking to our staff on the ground, this is actually, is a problem. How do we help people do this? So that's really was the nexus of coming up with a solution.
Yeah, and this is not a new phenomenon. I mean, overseas in the US and the UK, the sort of earned wage access, if that's what you want to call yourself, is quite a big industry. Can you talk about the sort of overseas dynamics and maybe the Australian market?
Yes, you're right. So overseas, the solution is, as you said, called earned wage access or sometimes on-demand pay. Now, it's been in America for about 8 or 9 years, UK for about 5 years, and across the whole of Europe. It's very much a known solution now. Close to 80% of Fortune 500 companies now offer it to their staff. And they're not offering it only to help the employees. That is, as I've explained, that's pretty easy to work out why staff need it. But the benefits to the company is significant. And that's why companies are now starting to embrace it significantly overseas. And what are companies seeing? Well, essentially a reduction in staff turnover rates. People are putting in more hours when shifts become available because they know they can access their money straight after their shift. They're less stressed. They take out less. They have less sick days. So for companies, productivity is up. Less costs in terms of finding new staff members on a more regular basis. Now, in Australia, we have been around for about 3 years now, so we're very much behind the rest of the world. And there's a long way to go within Australia to catch up. But we've got a number of great brands that have signed up in the last 2.5, 3 years. And we, it's just a matter of time before Australia sees the benefits globally.
And Steve, you mentioned the word getting paid after your shift then. I'm interested to know the example and how that works, and also what, I suppose, the regular payment cycles are in Australia. Is it sort of still weekly, fortnightly, monthly, etc., and what you bring it down to?
Yeah, good. So Again, we often get asked by companies, or a comment gets made, the take up overseas is significantly better because they don't pay weekly and fortnightly, or everybody gets paid monthly. Now, Australia actually mirrors America in terms of weekly, fortnightly, and monthly in terms of the percentage breakdown. The vast majority are paid fortnightly. As you know, we would know, many in the hospitality and retail space are paid weekly, and then the balance monthly. So it really is being used and adopted by most. Now, 44% of our client base right now pay their staff weekly, and we still get usage of about twice a month, and that is around 30 to 35% of employees. How our solution works at a high level essentially is for a frontline worker, we plug into the payroll software and the time and attendance or clock in and clock out software. It's a seamless integration. We are live literally within a couple of days. It's a simple click of a few buttons, and it's completely seamless. There is no change to the way payroll process works, and there's no extra work for the payroll person. As an individual clocks in and clocks out, once they've clocked out their shift, we know at that point in time, in real time, the number of hours they've worked. We then, through the payroll software, which is our source of truth, we determine what their standard pay rate is. And then we deduct all deductions that a worker may have. So it could be child support, car allowance, mobile phone, you name it. We apply the tax rate. And at that net amount, we normally allow any individual to access around 50% of their after-tax earnings at any point in time. Now, the 50% is not set in stone, but that's kind of the average that we do recommend, because we do want people to still come home with at least half their pay on payday for the standard expenses like the rent, the mortgage, the car finance, etc.
And Steve, a few years ago, we saw obviously this rise of financial wellness and financial management during the COVID era, where there's a lot of uncertainty around one's job and one's future, around whether we can pay the mortgage, etc. And we fast forward, 3 to 4 years now, and we're seeing a very uncertain macro backdrop with the cost of living. What are you hearing from the employers' side of things in regards to some of these employers that may be affected by this substantial rise in inflation and the cost of living?
Yes, as you said, 2-3 years ago, we had the Great Resignation that took place.
Oh, yes.
We now have what we call the Great Disconnect. And what we mean by that is employers / C-suites and frontline workers are feeling the high cost of living. But where we are now finding this great disconnect happening is that employees are still not feeling comfortable enough to go to or come to their employer or their manager to tell them that they're taking it tough. And the good thing is that although just over 60% of Australians are now living paycheck to paycheck, most are living within the paycheck. The problem is that expenses take place every day, but payroll is either weekly or fortnightly. So it's a timing issue. That is really the biggest problem. Now, people don't want to come to their managers or the company and tell them that they're having a tough time because they don't want to feel judged. So it's really now coming down to an education process and the fact that we need to match the employee's needs to the employer's knowledge around what's actually happening on the ground to create that demand to actually offer this, now and not wait another, 12 to 24 months.
And in regards to your business model, are you focusing on the B2B, as you mentioned, that integration, as opposed to B2C? If people hear about you, like, oh, maybe my employer can sign up, or can I be a part of this? Can you talk about the progression of your business and the focus?
Yes. So our solution is very much a B2B to C SaaS business. We work with companies. Really, what we say is we work to basically focus on uplifting the financial wellness of frontline workers. Now, in order to do that, we've got to offer a suite of financial wellbeing solutions. And within our solution, we have a number of modules. So that is budgeting and forecasting tools. We have an automated savings program for people. We obviously have the earned wage access that we've touched on. We have a discounts and rewards program. For those that are in a financial position where they don't know how to get out of this black hole, we also offer free access to qualified financial counselors, which tied with that is mental health resources. So all of that helps people, learn how to manage their money better. That's really the first time that many people have got themselves into a position where they no longer have savings. Now, we do have a number, unfortunately, of B2C players in the Australia market. They call themselves pay-on-demand providers. These B2C providers are effectively, in our view, a payday lender. They're providing a loan on the back of when a person is going to get paid. They charge, in our view, an astronomical fee of 5% of what the person is accessing. So for us, it is really important that we are a financial well-being solution. We are not alone. As I've mentioned, we're a B2B SaaS solution where the company pays a couple of dollars per month per employee to offer the solution completely free to their employees. For those companies that the costs may be too high for them, or they feel the employee should pay towards it, we do have a co-contribution model too.
Stephen, I'm interested before we touch on the future of the business, about the focus currently in regards to industry verticals. You mentioned hospitality before. Is there a focus on particular verticals, or do you think this can apply to multiple different verticals?
We do have a focus on key verticals, and that is, as you've mentioned, hospitality, retail, healthcare, aged care, NDIS, childcare, mining services. It's all of those sectors where you have a transient workforce, you have a workforce where they are living paycheck to paycheck, industries where it's really tough to attract and retain staff. And these are really the standout things where when workers are looking for that next job, instead of just hunting around for another $5 or $6 or $7 an hour, to them, it's more important to know they can get their money when they finish the shift. We do have clients in all industries. We've got engineering, we've got white collars, real estate sector. We've got one of our banks, Beyond Bank, is a new client of ours. So what we are finding, which is really interesting in the mid to higher income earners, for those people that have got a mortgage, if you draw down on your salary once a week instead of fortnightly or monthly, you can save up to 3 years on a 30-year mortgage. So time value of money, it's a whole new concept that we never even thought of for the higher income earner.
And Stephen, I'm interested to know what types of feedback you're getting from your customers at the moment.
Yeah, so for us, we've got customers being the companies or clients, and then we've got our users being the employees. So feedback has been overwhelmingly positive from our users to start with. Many users send us messages, weekends, really at the most unexpected hours, just giving their great deep appreciation for basically helping them get out of a tight situation. We even got one a few days ago saying, was really thankful he's been using our automated savings plan, never actually thought he would need to use it. His child got sick a few days earlier, needed some extra money for doctors, medical bills, etc. Landed up saving the money, which was as part of that savings account, and ended up using it, which is great. He never had to go, use a credit card or pay that loan to pay for it. From the employer side of things, feedback has actually been really significant. We've actually been working with a number of our clients in terms of their staff retention rates. And as we know, the key here is we need to make a solution that's worthwhile for both. So we are seeing across our client base a reduction in staff turnover rate of over 25% since implementing our solution. And when it comes to shift filling, staff are willing to put their hands up and work those shifts at the last minute because they know straight after that shift they can access their money. So if the car's going for a service or they need to take the child to the doctor, they put in a few hours of extra work, access their money, and they can go spend it, as opposed to going to use the buy now, pay laters credit cards of the world.
Stephen, I'm interested to know, in 12 months' time, we repeat this podcast, where would you like to see PayTime and the business?
We want to be the leading, what we call a financial wellbeing and benefit solution to frontline workers. We want this notion to be, with a fact around employees feeling comfortable to go to their employers and talk about their finances, or for employers to recognize that this notion of having a fixed pay period is good for everybody. If we think about it, before payroll software came out many, many years ago at factories, people would leave the factory site and get paid cash on hand every day. And it was only when payroll software came out that we had to land up going to batch payroll software and payments. So we think as it's happened overseas, the advent of only being forced to wait for that fixed pay period, should become a thing of the past. For those, of course, that don't need the money, let them get it on normal payday. But everything else in our lives is real time, except our pay.
No, it sure is, Stephen. Thank you so much for giving us an understanding of the PayTime business, the why, the why and the how you started the business, the progress of the business thus far, and also the future plans around the education, the wellness, and getting those employees to understand and employers to understand where people sit and also the impacts that it can make, particularly from a mental health point of view. Really enjoyed this chat and looking forward to catching up.
Right. Thanks, Chris.